What's up, dogs? Back again on another Monday, and gonna talk about a lot of stuff. Announcement: I'm almost at 100 subscribers, so 6 people need to subscribe, man, because I'm about to. I got one thing I'm about to talk about that's about to be super dope that a lot of people don't know about. But first off, let's just talk about this last chart that I posted. Oh God, I got so many viruses. Bam. Damn, look at that entry. Damn. Alright. Perfect entry, but didn't get the result that we wanted. So we got some things that we got to think about this week. I'm a bit uncertain this week, but let's just talk about what this is. I said, guess what is forming. So what was forming in my mind? Well, I guess we'll use this OK spot chart. So what was forming? Okay. So last video we said this was a liquidity void, right? And we'd probably test it, and we'd probably test it through the market maker sell model, which is basically consolidation here, and then right here, this is the key that we look for. But obviously we're looking to take out these lows. So one thing we got to notice is that on the daily chart, we see that you see 230 is a key level. So it's got the highs here. It's got the low. I mean, it consolidated all on 230 right here. So then we go down to a 1 hour, and we basically get to it. I mean, I might as well just drawn it like right here. If we go back to a daily, right? You see how 229 is really the level, because we got like this level here, this level here, this level here. So we're right at a daily level, and we've got this consolidation, breakout, consolidation, breakout. When we see that and we see market structure break down strongly right here, we're going to be aiming for, we're going to be anticipating the sell model to play out, and we're going to be aiming for this order block, which it did it right here. I mean, you really get a good example of it on OKCoin, where I think I did my chart on, and it's why it got so accurate, is because this was my target, right? This bearish order block. And that's just further proof of the order block concept made by ICT. So we break market structure, we come back into this order block where smart money was selling, because smart money sells into when liquidity is offered. And liquidity is offered when everyone's buying. So boom, they take it down, and then this is where they're interested, they take it down more. Now, what's troublesome right now is that I wish my mouse would work, man. This is bothering me. It's not scrolling, so I'll have to do it on the side. Anyway, it's just taken a long time for us to break down, which is usually a reversal sign, because usually continuations are quicker. So that kind of throws a stick in the mud right there. So got to look at other things. One thing I'm looking at is this bearish order block on the daily chart that Bitcoin is struggling to contend with. Also, we are at a key level of 215 that we've reacted off of, and we're making higher highs on currently. But we are also being held down by that bearish order block. So we got the bearish scenario and the bullish scenario. So kind of at like a middle ground right now. I wouldn't be bullish until price can get and hold above 223 on the weekly futures. And I mean, another thing is that we are continuously making these higher highs or higher lows. So something's got to give soon. I just don't necessarily know what is going to give. Although, I mean, I'm still favoring the bearish side, to be honest. But just keeping a really close eye on this order block to see what's going to happen. One thing that is good for the bears that I'm seeing is that, well, this day the candle's about to close. And so if that closes like that, then that means that this candle right here is the high. Then we have a lower high on this side and a lower high on the other side, which means this might be a swing high, which would really only be a retracement into this order block, you see? So if we get this candle to post like this and not break out above last day's candle, then we would have kind of like a fractal high at the order block, which is also an optimal trade entry. And the optimal trade entry I'm looking at is basically just right here to right here. And so if we go down to like a 4-hour chart just to give ourselves some more room, this is basically what we're looking at, right? We have the order block right here. We're making higher lows off the order block, and we have retraced into the sweet spot, the 70.5 sweet spot. We rejected that, and also this is a bearish order block too, which is being very cleanly respected. You see that? That's not really an accident. I mean, this is how markets work. So this order block is being respected currently. So if these highs were to be violated, I mean, if the futures would go to 226, I would start being scared of the bulls, and that would be a sign for me to just really, I mean, I'm probably like neutral exposure right now, to be honest, because I'm bag holding. I'm just flat on OKCoin futures, so I'm bag holding coins there, but I'm also short on other exchanges, so I'm probably just neutral right now. But I would significantly start looking for buys if we were to break here. And yeah, I mean, that's what we're looking at. Obviously, breaking this low would start to be a good sign for the bears, but it's still not done yet. We gotta really break down. Something's got to give soon. Another thing, well, actually, this is another thing I'm looking for. This is what I was talking about. This is like the key thing. This is like a concept that not many people know about. It's an ICT teaching, but it's like a nuance of an ICT order block concept. So what we're going to look for is if this is going to be a swing high, we might just consolidate for a while gradually making, while gradually going down, which would be a very weak sign. And what you want to see is you want to see the order block stacking downwards. And what I mean by that is kind of like, I guess this is an example, right? So it works bearish and bullish, but since Bitcoin is just so bearish, all I have is bearish examples. But like, this is a small candle, but let's just say like this is an area where whales or the market, I don't believe in whales, but the market makers, they're selling here. So when price gets back up into here, this is the order block that they're selling, so they'll sell more. But what happens then is that order block is going to move down as market makers accumulate more positions. And you can see right here, this is now the order block. Once price breaks down, it can only reach back up into this order block. And then you get the just the domination phase, right? So we're kind of stair-stepping down. We're selling here, it breaks down, and then we're selling here, then it breaks down, then we're selling here, and then all hell just breaks loose. You can see more examples. Well, not here. You can see more examples. Oh God, I have so many viruses now for some reason. That's not good. I've never just gotten a pop-up out of like nothing. Fucking computers these days, man. But anyway, oh shit. Okay, hold on. I got a really good example that would really prove this point. And I can't use my mouse. My computer's just gonna die, dude. My computer's about as strong as Bitcoin right now. Actually, that might not be true. My computer's probably weaker than Bitcoin right now. Bitcoin can actually hold some higher lows right now. My computer's just popping up shit out of nowhere. Alright, so you're gonna have to ignore this shit. This is just something I was looking at earlier. But this is a really good example of when we consolidated for like 3 months right after the bubble. You see this order block rejected, then you see they start selling here, and then you see they start selling here. And then once they've accumulated all their positions, then it crashes. So that's what I'm keeping an eye out for this week, right? So if we go sideways, I'm going to be, I mean, this order block is key, right? So it might very well be that price is going to break down a little bit. If we bounce off 215, price could do that. And then what would happen? We would be using this order block. And then price might be finding resistance at this order block. And that would be a dead giveaway that Bitcoin was fucked. So that's something to look out for. But also, if this order block doesn't hold and if it breaks, then that's a sign that, that's not a institutional price level that big money is willing to sell at. Which would mean higher prices, right? Because it kind of be like the floodgates have opened. And in that case, we would be going to this order block probably, or maybe like, like a key support level, probably 250, 255 is really where this, 254, where this order block is, and that would be a good target, in my opinion. Another thing that I'm seeing is that usually, well, I mean, we are at the 61% extension, which is the sweet spot, but usually I find that that's not enough, which is another reason that's got me skeptical about a bear run. I mean, if we just use this retracement right here, right? I mean, there's our 60, 61, but it does break down a little bit more. So even if this is bullish, it's very likely that it's still got one more fake out down to like the 70%, 79% level. And I mean, rarely does Bitcoin just retrace to the 61%. Another example would be here to here, right? Bitcoin's not just holding at the 61%. It's going to break through it a little bit. So, I mean, I could give more examples, but let's just do it. Because what else am I going to talk? I mean, right here. I mean, this is kind of an errant wick, but it goes to the 70% level. And then this retracement right here. Before we get a reaction, we go to the 79% level before we bounce up. So, I don't know, man. I don't know. That's just what I'm watching, man. That's all I have to say, really. But that bearish order block concept is, I mean, just the order block concept is pretty deep. It just gives you like a first-hand look at what's happening behind the scenes, like what big money is really doing. If we see the order block stacking down, that means that a huge short is getting put on, and that's powerful. That's just like, it's better than any indicator you'll ever see. I mean, if you see that one time a month and you make a trade based on that, you've made more money than anyone using any indicator has ever made. So, I mean, that might be an exaggeration, but I'm writing these articles for themerkle.com, THEMERKLE, and so they have to be 500 words. So then I'll throw in these these chart patterns, right? But what I've really found is these chart patterns are just bullshit, dude. Like a triangle, man. Anyone that did a little breakout triangle here, you got your triangle, right? And you're staring at your 15-minute chart, right? Well, anyone that bought a breakout here just got wrecked. And then what's happening now? I mean, this triangle is stupid. Likewise, there was another thing that I was writing about on you should go check out the Merkle. It's pretty dope. themerkle.com. And then I write the daily Bitcoin price action forecast. But I mean, this is like a bear flag, right? This is textbook bear flag. So what we're gonna do is we're gonna short the breakout, and we're just gonna make fucking mad money when our bear flag completes. But what happens is it just breaks down and then goes straight back. So anyone that shorted here on the breakout is now, a couple hours later, they're just wrecked. So I mean, really what I'm talking about, wow. I have the worst computer in the world. I mean, what I'm talking about is like the real shit that really works. And you don't have to trade every single day. You probably shouldn't trade every single day. But this is like the real shit. So, in summary, just watch that order block. If we see it stacking down, I mean, it's just free money on the table. If we see it breaking, we would obviously reduce all risk on shorts. And, but yeah, I mean, we talked about some cool stuff. I mean, if this is a swing high, if this red candle is going to be a swing high with the lower low on one side and the lower high on the left and the lower high on the right, that might be an early indication that it's just a retracement up into this order block, which got rejected, which means we might be heading lower. And yeah, I mean, that's all I have to talk about. I talked about this little swing high that may be forming. I talked about the staircasing of the order blocks. Upside target 250 if this order block doesn't hold. Downside target, I mean, 200. 200 was like the sweet spot we had. Yeah, OTE long. 200 is a good round number to expect to bounce. And it could be bullish. I mean, we could be bullish at 200 it's not unreasonable to expect just a 70% retracement from this leg down to here. And it could be bullish depending on what happens. Generally, if I'm going to predict a reversal, I'd like to see a retarded amount of volume go down, and I like to see big wicks, which is not, it hasn't been the case. So, I mean, I've been kind of rambling, but that's just kind of the state of mind that I'm in, state of Bitcoin. It's just kind of throwing me for a loop. All we can do is really just look at both sides of the story. I think I've done a good job about that, but I mean, shit. What are you going to do? Might be bullish, might be bearish. All I know is Bitcoin's acting weird lately, so that's why I just kind of reduced my exposure to this game. I'm actually going to make a Forex video right after this because I think I got a really good Forex trade in the making. So check that out. But yeah, that's basically all I got for this week, and I'll see y'all next Monday. But until then, good luck and good trading.